1. Are diamonds still a luxury? De Beers faces the lab-grown diamond surge. 2. De Beers faces diamond industry crisis with surge of lab-grown gems. 3. Lab-grown diamond prices plummet. 42% drop in 1 year. Wholesale market update Q2 2025. 1. Are diamonds still a luxury? De Beers faces the lab-grown diamond surge. Is diamonds still a luxury? De Beers faces a priceless conundrum. Business Insights. De Beers CEO Al Cook is grappling with a huge con in the diamond market, as consumers increasingly turn to lab-grown stones for their affordability and authenticity. This shift threatens to redefine the diamond industry's legacy, which once symbolized exclusivity and timeless romance. The company's iconic brand, built on decades of selling diamonds as a symbol of love, now faces a reckoning as synthetic gems challenge traditional perceptions. For generations, diamonds were seen as nature's rarest treasure, formed deep in the earth over billions of years, then mined in exotic locations. But today, labs can replicate this miracle at a fraction of the cost. A decade ago, lab-grown diamonds were novelty items. Now they're mainstream, and their presence is reshaping how people view diamonds. Walmart's first lab-grown diamond sale in 2022 marked a turning point, with these stones now making up half of its diamond jewelry line. Even luxury retailers like Signet Jewelers, the world's largest diamond retailer, are pivoting to include lab-grown options in fashion jewelry, helping them escape a sales slump. The battle between natural and synthetic diamonds is not just about price. According to independent analyst Paul Zimnisky, synthetic diamonds now account for over 20% of global diamond jewelry sales, up from less than 1% in 2016. Engagement rings are particularly vulnerable. More than half of U.S. couples purchasing them last year opted for lab-created stones, a 40% increase from 2019. Matt Bick, a third-generation diamond seller in London, notes that diamonds were always seen as expensive, a rich person's asset. Now many believe they're accessible to everyone. Cook's dilemma lies in the flood of lab-grown diamonds from countries like China and India, which have undercut demand for natural stones. Anglo-American, De Beers' parent company, slashed its majority stake in the diamond unit by $4.5 billion in 2023, raising concerns about the future of the industry. Meanwhile, Trump's tariffs have pushed natural diamonds in the U.S. to higher prices, as consumers opt for cheaper lab alternatives. De Beers and Anglo have signed non-disclosure agreements with potential buyers, with an IPO still on the table. Cook admits he didn't anticipate the urgency of selling De Beers, but the pressure is mounting. In a bold move, Cook shuttered De Beers' production of lab-grown diamond jewelry under the Lightbox brand, betting that synthetic diamonds could reverse the price drop of mined stones. While these diamonds are 100% carbon and share the same hardness and sparkle as natural ones, De Beers' survival hinges on consumers believing authenticity can't be replicated in a lab. During a recent interview, Cook warned that too many mass-produced stones are masquerading as something special, arguing that shoppers are being misled by wildly different prices for the same product. He called the lab-grown diamond debate a huge con that risks becoming unsustainable. To promote natural diamonds, Cook pushed Anglo to boost De Beers' marketing budget to its highest level in a decade. With Botswana, De Beers' largest diamond supplier, the company increased its marketing allocation by 25% this year. Meanwhile, organizations like the Natural Diamond Council, which calls lab-grown diamonds the dupe, are working to legitimize mined diamonds while casting doubt on synthetic alternatives. The council's managing director, Christina Buckley-Cale, emphasizes that natural and lab-grown diamonds are not the same. De Beers funds the council but doesn't participate in its marketing campaigns, per a spokesperson. Botswana, which relies on diamond exports for its economy, has cut its growth forecasts amid a prolonged industry slump. The two sides are collaborating to combat the stigma of blood diamonds, mined in conflict zones, and restore trust in the industry. Botswana's ambassador to the U.S., Mfomo Futing, notes, "We are where we are because of the value of diamonds." Meanwhile, Samantha Boselli, a 29-year-old publicist, chose a lab-grown pear-shaped diamond for her engagement ring, highlighting the growing affordability of synthetic stones. She doesn't care about resale value, but she values the stone's sentimental significance. The diamond industry's future is shaped by both innovation and tradition. De Beers, founded by Dutch Afrikaner brothers Diederik Arnoldus de Beer and Johannes Nicolas de Beer, once controlled 90% of the world's diamond trade. Its famous tagline, "A diamond is forever," emerged in 1947, cementing its role as a symbol of enduring love. However, as new mines in Russia and other regions emerged, De Beers' influence waned. Lab-grown diamonds, once a niche product, now threaten to redefine the market. While gem experts struggle to distinguish between lab and mine stones, De Beers is investing in tools like the diamond-proof device, which costs $9,500, and can identify synthetic stones in seconds. Fashion trends are shifting, with luxury jewelers like Tiffany & Company opting out of selling lab-grown diamonds, citing their lack of rarity. Walmart's 2024 sales of lab-grown diamonds surged 175% compared to the prior year, driven by price-conscious consumers. Pandora, a Danish retailer, shifted to lab-grown diamonds in 2021, citing environmental benefits. CEO Alexander Lassik called them breakthrough technology that can't be countered by negative ads. Signet, the world's largest diamond retailer, is expanding its lab-grown offerings, aiming to balance the allure of natural stones with the rising demand for affordable alternatives. As lab-grown diamonds continue to dominate, the question remains, will they erode the mystique of natural diamonds? De Beers CEO, Cook, warns that synthetic stones may one day be indistinguishable from knockoffs like cubic zirconia, which have different chemical structures. For those who've paid $2,000 for a lab-grown diamond only to see its value collapse, Cook offers condolences. "I weep for you." 2. De Beers faces diamond industry crisis with surge of lab-grown gems. In a surprising twist for an industry once dominated by a single powerhouse, De Beers, the global diamond giant, is now embroiled in a major industry crisis. As synthetic, lab-grown gemstones surge in popularity, the company finds itself struggling to maintain its market share and influence over consumer preferences. This shift is not just a business challenge. It's a seismic change that could redefine the very essence of the diamond trade. But here's where it gets controversial. While some hail the rise of lab-grown diamonds as a sustainable and ethical alternative, others decry it as a threat to traditional mining jobs and the cultural significance of natural diamonds. And this is the part most people miss. How will De Beers adapt to this new landscape without compromising its core values? Will it embrace the future of synthetic gems or cling to the past? The outcome could set a precedent for the entire industry. What do you think? Should we welcome synthetic diamonds with open arms or advocate for the preservation of natural stones? Join the conversation in the comments below. 3. Lab-grown diamond prices plummet. 42% drop in 1 year. Wholesale market update Q2 2025. Warning. The diamond market is shaking, lab-grown wholesale prices plummet. Are you ready for a shocking truth about the diamond industry? In the second quarter of 2025, the wholesale trading prices for lab-grown diamonds took a staggering dive, leaving many to wonder what's next for this burgeoning market. The numbers don't lie. A 6.7% quarter-to-quarter free fall. According to renowned researcher Eden Golan's Q2 2025 LGD wholesale price list, lab-grown diamond wholesale prices experienced a significant 6.7% decline from the previous quarter. But here's where it gets even more intriguing. When compared year over year, the drop is nothing short of dramatic. Asterisk a whopping 42% yearly decline. For the popular 1 to 3 carat category, prices plummeted by a staggering 42% compared to the second quarter of 2024. Asterisk the 3-carat round conundrum. Perhaps most astonishing, the wholesale price of 3-carat rounds was slashed in half over the past year, begging the question, what's driving this sharp decrease? Understanding the pricing landscape. It's crucial to note that the LGD wholesale price list reflects the wholesale market's trading dynamics, distinct from retail costs. To put this into perspective, asterisk the average retail cost for a round, 1-carat, IGI-certified LGD was approximately $191 per carat, nearly double the wholesale market trading price. Asterisk in June, U.S. retailers enjoyed a 32% decrease in what they paid for LGD loose stones compared to the previous year. The margin paradox. High profits, lower sales? Both wholesalers and retailers are enjoying remarkably high gross margins on lab-grown diamond wholesale prices. Specifically, U.S. jewelry dealers are seeing an average gross margin of 74% for 1 to 3 carat rounds, up nearly 8% year over year. But here's the paradox. Despite rising gross margins, the decline in retail price and retailers' costs outpaces the increase, leading to lower gross profits. A glimpse into best-selling items. Data from Tenoris reveals the top-selling lab-grown diamond item in Q2 was a 2.23 carat round E/VS1, accounting for over 20% of LGD sales. These items sold at an average of $917 per carat, boasting a gross margin of 74%. Now it's your turn. Do you think the lab-grown diamond market will continue to see price drops? Or is this a temporary adjustment? How do you perceive the high gross margins in relation to the overall market dynamics? Share your thoughts and predictions in the comments below.